the coming to being of the Nigerian Mortgage Guarantee Company by Central Bank is being sponsored by World Bank and Central Bank, along with other stakeholders, including the Mortgage Banking Association of Nigeria, which I also represent as the president. And it's part of the jigsaw puzzle. I must say, fixing the mortgage market, the mortgage industry is a big elephant jigsaw puzzle. Part of it is NMRC. NMRC is to provide long-term funding, which is raise money from the capital market, which is the only sustainable source of funding for mortgage industry. Now, the guarantee company is complementary to that. It's not a competition. It's not competitor to NMRC. In fact, NMRC will be an investor in that company to the tune of about 25% of the shareholding. The idea is for the guarantee company to guarantee mortgage loans so that if mortgage banks give loans or commercial banks and the loans go back and is foreclosed, they have somebody who has their back. The guarantee company will pay 40% of the loss on the loan, which means it will deepen the mortgage process. More loans will come up, and the people will feel, well, they can underwrite more mortgages for Nigerians. Okay, speaking about underwriting mortgages for Nigerians, now President Buhari is also, through legislation, looking to inject 500 billion naira into the Federal Mortgage Bank of Nigeria. Now, currently, that only has about 18,200 mortgages, and I'm just wondering, for an agency, a government agency that big, and for the population that we have, 180 million people, and the 17 million housing deficit that we have, what are your thoughts in terms of how this could impact on the bank's ability to give out mortgage loans? Well, this will really impact positively, because presently the Federal Mortgage Bank of Nigeria, I must say, is undercapitalized. The share capital is 5 billion, which is the same with a mortgage bank like Trust Bond. A mortgage bank who has a national license has 5 billion. Those with state have 2.5 billion. So you can imagine if Federal Mortgage Bank of Nigeria has 5 billion capital just like Trust Bond, I mean, it is certainly truly undercapitalized. And that is the idea behind trying to recapitalize it to 500 billion. So if this goes through the Reps, House of Senate, and it's passed, and we get the money, how much more can FBN take on? I mean, 18,200 right now. I'm just wondering, can it take up more? Well, I'm sure it will have a very impactful effect on the market. One, for instance, I'm aware that the House of Reps have passed this, and I'm sure what government intends to do is to fund this over 5 years, 100 billion every year, and that will probably be in the budget. If you look at 500 billion, and you look at an average of 5 million for each house or for each mortgage, that's almost about 100,000 mortgages. That certainly is a big thing, considering the fact that total mortgages we have now is only 50,000. So for a country of 180 million, that's 180 million going to 200 million, certainly. But we also know that it's not from the capital that Federal Mortgage Bank is going to write all these mortgages. But a lot of this money, what it does is it will build up the balance sheet to become much bigger. If you have shareholders funds about 500 billion, then it means to be easier for them to attract more funding from the market, either through the capital markets, issuing bonds. Because the bigger you can leverage on your shareholders' funds. So you think investors will be interested? Oh yes, because government has more at stake in this, and of course we also expect that there will be a lot of restructuring being done. Right now, I know that the new management is doing a lot of this, and of course more people will have more interest and will have more confidence that this is a bigger balance sheet and they can attract more funding for the mortgage market. Okay, for the average Nigerian now, the average working class Nigerian, either the middle class or the mid-middle or lower middle class, who wants to own a home, either through a rent-to-own scheme or just basic mortgage finance. How is it? Do things change for such a person? Oh yes, I know that, for instance, there have been quite a number of changing policies by Federal Mortgage Bank and working on NMRC as well. NMRC and Federal Mortgage Bank are both secondary market operators. NMRC complements the efforts of Federal Mortgage Bank, and they raise their money from the market. Okay, Adeni, I want us to break this down so that our viewers get a better picture. Let's speak hypothetically now. If I wanted to take a mortgage, talk me through the process. Okay. What is it? What do I do? I walk into, where do I go to take? How long? What is the process? What are the steps? And what is the outcome? Okay, fine. If you want to take a mortgage, you go through a mortgage bank. These are the primary lenders. The mortgage bank obtains funding from the Federal Mortgage Bank or from NMRC. You have an application. We have what they call underwriting standards. It depends. It's either you are an employee of a company, you are an employee, and of course, you look at your cash flow in terms of your salary. Will you be able to pay the mortgage? And for the kind of house you want to buy, once you can meet that, it's either you're an employee or you run your business as self-employed. we now have underwriting standards for the informal sector and self-employed. Once you meet that evaluation criteria, the mortgage bank will now fund your mortgage. If it's NMLC.
At what percent?
No,
I know the, okay,
right now, I know that, for instance, if you are taking the loan from Federal Mortgage Bank, it is 6%.
Okay.
Single digits. And that is only single digit source of funding right now in the marketplace. And now because of that, we also know there are a lot of people that want this. Because it's only 6%, and then it goes through a Federal Mortgage Bank, they fund that. If you're going through an NMLC is market-based. And of course, the rate is 17%. 70% is pretty high. We're looking towards having a single digit rate. But if you look at where we're coming from historical, as at sort of 2 years, 3 years ago, it was about 22%, and it's now about 17%. There are a lot of engagements, working with stakeholders, working with the pension community, working with investors, PenCom and Central Bank to see how we can bring in the pension funds too. Because we have a lot of funds in pension, about 8 trillion. If some of these can also come into the mortgage market, it will definitely trend down the issue of pricing, and it can be much lower. But
17% itself is very high, and is it over a 30-year period?
Well, I must say it's been inching downwards. As I said, it's a big work in progress. The 17% is not where we should be. We should be inching towards a single digit so that we can have more people have access to mortgages and be able to afford it.